Our company news aside, the inflation picture in key African territories is still looking quite complex as the continent battles forex issues and sticky food price inflation due to climate change impact. This week we'll see CPI prints out of Ghana, Botswana and Namibia. Ridle Markus, SSA Macroeconomist at Absa CIB, joins us with his analysis on these regions and the expectations it points to as far as inflation data is concerned. Thank you so much for your time, Ridle. Now, after about 4 months of a slowdown in inflation there in Ghana, the consumer prices look set to pick up for the month of August. What's responsible for what could be a surprise turn in direction?
I think it's important to understand some of the issues that Ghana is having at the moment, which includes a currency that is depreciated by nearly 24% year to date against the US dollar. So on the other hand, we've also got some base effects. Ghana has benefited from base effects for the past year, where we've got these inflationary pressures driven by the currency that continues to put pressure on month-on-month inflation. But you saw the year-on-year inflation pushing towards 21%. However, we are now in a situation where some of the base effects are actually starting to fade, and the month-on-month is playing a more important role in here because of the FX pressures and adverse weather conditions, putting price pressures on food products, for example. So we think that inflation could potentially move up to as high as 23.5% when the August number is being released tomorrow.
Yeah.
But of course, given the high the high level of inflation, there is a risk of upside surprise. There's also a risk that could come in slightly below expectations. But primarily, as I said, fading base effects, but also the weaker exchange rate is likely to put pressure on Ghana.
Ridle is also the main culprit here, food, because, of course, we like to check in between food and non-food inflation when we look at this trajectory.
Yeah, so as I mentioned, adverse weather conditions has certainly played a role. We know that, for example, on the cocoa side, cocoa production has really been impacted early in the year. The West Africa region has had a combination of drier weather conditions, El Nino-induced dry conditions early in the year, and now it's devastating floods in some part of the region. Food, of course, is quite an important component of the Canadian inflation picture, nearly half of the basket. So it does obviously impact. And now when you have the currency also weakening at the same time, it means that your imported food obviously also see upside pressure on prices. For the continent as a whole, I think that's a big concern that the food component within the inflation basket is so huge, and food insecurity has become a massive talking point and a huge concern for government all over the place. In Ghana's specific case, as I said, the price pressure on food also come from FX. We did see the currency stabilize in recent days, and we can just hope that that would be less of a driver going deeper into the year. Of course, the other concern that we have in Ghana's case is the elections. The elections are being held on the 7th of December, and there is a risk that higher than normal election-related fiscal spending, of course, could also play a role in a weaker, in a weaker exchange rate, but then also in higher inflation. So we do actually see Ghana's inflation moving closer to 25% by year end, which will again be a reflection of the weaker currency, but also the elections putting pressure on Ghana and then fading base effects. But I think that's all temporary. Hopefully by next year we could see inflation dip quite substantially towards 15% by year end.
Ridle, you talk about weather and how that is impacting the inflation picture there in Ghana, but also in Botswana, they're experiencing a drought there, and I do believe that inflation is expected to tick up there as well. How much of an impact is that drought having on what we are seeing with consumer prices?
I think Botswana is, of course, slightly different. Botswana's currency has been benefited by the strong rand. Keep in mind that the rand is about 45% of the Pula basket. So the currency has been fairly resilient in Botswana. But as you rightfully pointed out, the drought is, of course, a concern. It's not just a Botswana drought, it's a regional Southern Africa drought. We're obviously hoping that the upcoming race season will bring better rainfall. But for now, that drought is putting pressure on prices in Botswana too, although we haven't seen food prices increase to the same extent as some other parts of the region, for example, in Angola, etc. But we do see inflation ticking higher to 4% from 3.7% previously. There is a risk, of course, that it could come in slightly below that. And that risk is being brought by the fairly weak demand conditions in Botswana, the non-mining sector, I suppose the mining sector too, but the non-mining sector, which is relevant for inflation in this case, has had a fairly challenging and difficult period in the first 8 months of this year. And we think that subdued demand could also play a role and potentially see inflation coming in slightly lower than what we generally expect.
All right. Well, a country that might not see an uptick in inflation for August is Namibia. And even though they do have drought risks there as well.
Yeah, so the inflation number for Namibia, I think it came in at 4.4% compared to what we thought was going to be a decline to 4.3%. But Namibia's got a drought as well. But just like Botswana, Namibia is benefiting from the stronger rand. And I think from what we know now, the fact that fuel prices have been stable for a long time now, oil prices are in the low 70s compared to the $80 not too long ago. I think, we're looking forward to inflation remaining well within the target band in Namibia too. We've already seen the Bank of Namibia cutting the policy rate by 25 basis points at the previous meeting a couple of weeks ago. And we think that with inflation at these kind of, levels around slightly below the midpoint of the target range, that they too could be looking at further cutting the policy rate over the course of the year. So the inflation picture looks positive for Namibia, despite the challenging conditions. But of course, if the rand starts to move weaker and the Namibian dollar being pegged to the rand, that could pose renewed challenges to Namibia, especially at a time when Namibia is also experiencing a drought. So, we are cautiously optimistic about the outlook for Namibia, but keep in mind that the drought always remains a risk factor in the market such as Namibia.
All right. Well, thank you so much for your time and giving us insights there, Ridle. Much appreciated. That was SSA Macroeconomist at Absa CIB, Ridle Markus.